Good Saturday morning to you, and welcome to On the Mark alongside Mark Pappa. I'm Gary Byron. Mark is the president and CEO of Financial Resources Group. They're right here out of Glastonbury, Connecticut. You can find them online at www.frplan.com. That's F as in Frank, R plan, frplan.com. More importantly, I want you to write this phone number down, and I want you to call it. And there's a good reason. This is going to benefit you in several different ways, including the first 5 callers getting an assessment that's, I was going to say, it's valued at $2,500. It's actually priceless. It might be even more than $2,500. I'll have Mark explain that sometime during the show. But here, write this number down and call it. Be one of the first 5 callers this morning. 860-657-8380. I'll do it one more time for you. 860-657-8380. And if you missed any of those points of contact, no worries. I'm going to give it to you at least a couple of more times before the show is over. Well, good morning there, Mark.
Good morning, Gary.
How are you this morning? How was your week?
It was great. Happy to be back.
Happy to see you.
Steady busy. It's summer, and summertime is a time where we like to do our client reviews because it's a little bit more quiet, a little less hectic. It's not really the best time to be out there prospecting. So good time for us to sit down with our clients and kind of review all the things that I've been talking about on the show.
Ah, well, that's why we're here. Are you enjoying any of the summer yourself right now? I know you like to take trips. You like to take your son, and really in driving distance. I mean, you seem to have. Yeah. I know you work hard. I just want to make sure you're playing hard.
Yeah, of course. No, summer's just feels like it just started kicking off. We're starting to feel warm again.
Yeah, last couple of weeks.
And the water's still probably a little too cold for me. So, I'll do day trips to the beach or, go to the turf field and whatever. Just spend more time outdoors. It's a much more pleasant experience than the winter we just had. So.
Couldn't agree more. Today we
spring, for that matter,
are tackling something that directly affects, I think, just about every homeowner and renter, for that matter, in this state. Home insurance, even renters insurance, specifically a troubling trend that really has gotten dramatically worse over the last decade. I'm talking insurance companies collecting your premiums faithfully year after year, and then what? Refusing to pay when disaster strikes. And Mark, I know this is something that you have heard of time and time again, and I can't wait for you to weigh in on this.
Yeah, and since 2014, when I started doing the full checklist, we've been talking about the Property Casualty Check List review. This isn't new, Gary, but it's just gotten a lot worse. What really motivated me to do this radio show was a June 1st Wall Street Journal article where they did an investigation, growing home insurance risk, claims that don't get a payout. So the Wall Street Journal investigation finds that the 5 largest U.S. home insurers failed to pay out on more than 44% of the claims resolved in 2024, up sharply from 36% a decade earlier. This includes major players, and again, I'm not saying anything bad about these companies: State Farm, Allstate, Liberty Mutual, USAA, which people think is, and Farmers. These are like the gold standard of insurers, but yet look what's going on. So they're denying people's claims, which is not a good thing. So we need to be aware of what's going on in our policy.
So when you read that, what was your reaction? I mean, I'm just curious because I get the Wall Street Journal, but I didn't see that article. That's bothersome.
Yeah. Well, here's the deal. Honestly, Gary, it was confirmation of something I'd been seeing anecdotally with clients, but hadn't seen quantified so starkly. 44% is nearly a coin flip. You pay premiums for 10 or 20 years, and something terrible happens to your home, and then there's nearly a 50-50 chance the insurer says, sorry, we're not going to cover that. And here's the kicker. This wasn't always the case, Gary. So a decade ago, that number was only 36%, and these companies have made a deliberate business decision to deny more claims. And as a fiduciary, that deeply concerns me because it creates a massive hidden gap in my client's financial safety net.
All right. Let's dig into the numbers here because I'm looking at the printout that you provided for me this morning since I didn't see that article. The Journal analyzed data filed with the National Association of Insurance Commissioners. We're going back to 2016 right here, right? So I don't know, just walk us through what's really going on here. Let's start there.
Okay, sure, Gary. So the Wall Street Journal looked at what percentage of resolved claims each year result in zero payment to the homeowner. So let's repeat that. So the journal looked at what percentage of resolved claims each year result in zero payout to the homeowner. And by resolved, they mean the claim is fully closed and still not being processed. And what that found was a clear, consistent upward trend across the biggest names in the industry. Again, State Farm, Allstate, Liberty Mutual, and Farmers, all trending in the wrong direction. USAA went from a 49% no payout to 51%. And then some companies outside of the top five, like Slide Insurance in Florida, which not exactly, I've never even heard of Slide, but I don't live in Florida.
Yeah, I was going to ask you with that. Yeah.
They went from paying nothing to 26% of claims in 2022 to 50% in the following year. That's a shocking deterioration in just 3 years. And we walk people through exercises, Gary, of different examples, which we'll go through today, of what insurance companies are doing. Because what happens if you say, hey, we need to raise your premium because claims have spiked in your area? Are you going to just say, sure, I'll pay the extra, or are you going to start shopping around?
Oh, I'm going to shop around here.
And exactly, you're going to start shopping around. Now, let's say they send you a policy change summary, okay, with that big, thick prospectus, 50, 60 pages. Who has time to read that?
No one's going to read that.
Right. And are they going to put the changes on the front page, or where do you think they bury them?
It's small print, last page, right?
Yeah, somewhere, right, exactly. So that's why it's so important we help people review this stuff.
So
Gary.
did you see, I'm looking at this, did you read about the homeowner in Tulsa? The Journal, right here, it profiled a homeowner in Tulsa, Oklahoma. It's a doctor. Her home was hammered by golf ball-sized hail. So an outside contractor said the roof needed a full replacement. You're talking nearly $50,000 worth of damage. Well, State Farm came out and said, nah, you're fine. It valued the damage at, listen to this, $2,000 below her deductible. So therefore, what? Not a penny is paid.
Yeah, well, that's pretty unfortunate. And now this is a doctor, Gary. So is she a smart lady or a dummy?
Man. Of course. Right.
So, and these tend to be people who are on their game, right, and who do take the time to read their policies. But in that case, it's very, very significant for a reason beyond just the dollar amount. Her attorney says State Farm was using what he called a secret playbook and a narrow internal definition of hail damage that was never disclosed in the actual policy. So the homeowner signs a contract and pays premiums faithfully to the insurer and is using criteria to evaluate the damage that doesn't appear anywhere in any of the documents she signed. So that is not just unfortunate, but that's a potential breach of contract the homeowner reasonably believes she had in that case.
Yeah, and in Florida, I mean, let's talk about what happened there. Well, with that, the back-to-back hurricanes. Remember back in 2024, Helene and Milton? Whoa.
Yeah, I know, and then there's more to come. Unfortunately, Gary, Florida is the extreme example. The state had the highest no payout rate in the country. More than 2 in 5 homeowner claims in 2024 came back with nothing. After Hurricane Milton alone, insurers declined to pay on claims from over 95,000 Florida homeowners. And the leading reason, damage fell below the deductible. Think about that.
Wow, yeah,
so a lot of that damage was below the deductible. And that's the trap. The insurers have been dramatically raising deductibles, especially for wind and hail. So sometimes converting them from a flat dollar amount to a percentage of the home's total value. Right? So now think about this on a $400,000 home. And that's a low-priced home. Let's face it, home prices are way up. A $400,000 home with a 2% wind deductible, you're eating $8,000 before your insurance even kicks in. So many homeowners don't have any idea that's even in their policy. And that's exactly why, Gary, people need to call me and get in front of me so I can give them that property casualty checklist to meet with their agent, to scrub that policy, to look at that fine print, and have your agent who's getting paid a commission help you with that so you avoid these problems. Okay, you need to screen through your
Mark,
policy.
why?
So that's why we find this so important. I can't stress enough, especially now after reading that article, that people really, really need to get this done.
Yeah, my head is spinning over here. Why is this happening? Because the insurance industry isn't doing this out of pure malice, right? There's something that's driving the push to deny these claims? Why are they doing it, and what is that push?
Well, there's a few legitimate factors and a few that are more troubling. On the legitimate side, insurers had a brutal run of losses after the pandemic. You had all sorts of things. You had, the climate change. You had the California wildfires. You had, Maui basically burnt to a crisp.
I remember that, yeah.
You've had fires, floods, hurricanes, all sorts of different things. And is this happening more and more, less and less nowadays?
Of course. It's all I'm hearing about.
More and more, right? So flood damage, for example, typically isn't covered under a standard homeowner's policy. You need to buy flood insurance. And then people file flood claims after a hurricane. They get denied because that's simply not what the policy covers. So you have to pay extra. And then the technology has also made it easier to file claims quickly, which has increased the volume of claims that get withdrawn or fall below the coverage thresholds.
Ah, man. And the less legitimate factors? What about those?
Well, and again, we use the cereal box example, Gary. When you go to the grocery store, they're putting more and more cornflakes in that box or less and less?
It's all air now in cereal boxes.
All air, right?
Yeah.
Now, can they take that $4 box and raise it to $10 and give you a full amount of cereal? What do they want to do?
Right. They want to give you the least amount for the most amount of money.
Exactly. So it's the profit motive, Gary. And insurance companies have a direct financial incentive to deny claims. Every payout reduces their bottom line, let's face it. And the journal quoted Slide Insurance, again, this is an extreme example, a Florida company which actually told investors in its stock market debut that it's, before it went public, that, and I'm quoting here, vigorously contests payment of claims it believes lack merit. So that means, I want to take a policy out with this company knowing this. So now, every company has the right to contest fraudulent claims, but when your no payment rate goes from 26 to 50% in 3 years, you have to ask whether the vigorously contesting means denying things that should actually be covered or actually be legitimately paid. And the final insult, Gary, a homeowner who gets denied can still face a rate increase or non-renewal because of a mere just filing a claim, even if nothing is paid and flags and they just flag you as a high risk consumer. So I actually brought a piece in here about with the state of Connecticut and how they handle that as well. And in the state of Connecticut, there are some laws on the books, which we'll go through, later in the show. But, they can actually just flag you as somebody, hey, you called us to put in a claim. Now we're going to raise your premiums, whether they had to pay anything or not.
I'm glad you brought that in for Connecticut. That'll help people who are listening right now. But I'm in the same article, but where was it? Oh,
Oklahoma?
Oklahoma homeowner, right? She filed a claim. State Farm paid nothing. And then they dropped her policy entirely.
Yeah, exactly. So they dropped her, and what's unfortunate is she paid around $10,000 a year for at least a decade. Filed one claim, got zero. Then they dropped her, and that's not a safety net. That's a mirage. And and that's why I talk about to every one of my clients about their property casualty coverage, because it's not, not just an insurance question, but as a core part of their financial plan. So imagine this: if you had a $50,000 uninsured repair. Could that potentially derail your retirement for that year? Mm. Let's say you had to take an extra $50,000 out of your IRA, or you had to pay tax on your brokerage account, to liquidate that money. And then again, you got that, there's a thing called property casualty theft and loss, which I know how to do, but it's not always qualify unless you're in a disaster area. You can't get that deduction. So now you'd have to increase your income, pay taxes, add insult to injury. And a $500,000 liability gap can be very, very damaging. So what kind of advisor would I be, Gary, if I wasn't helping people protect them?
Yeah, obviously, Mark, this is where your work really comes in. I mean, you've developed a resource specifically to help people address these gaps before they even become a crisis. So talk to me about P&C Review Kit. Was it fullchecklist.com? No, fullchecklist.org. I'm sorry.
Well, the fullchecklist.org is kind of like the base. www.fullchecklist.org is a place you can go to find benefits that you're owed you may not be aware of. And the P&C checklist is just one of those main things that that's at it, but that's at its core. But this is part of a comprehensive financial checklist system, and the idea came from simple frustration. People came to my colleagues, and all these bad things were happening. They didn't want to pay for new roofs. The water table would rise. They would call it a flood. All these little things. So that's exactly why we want to make sure we cover every nook and cranny of that policy with this checklist, and your agent. We're not here to knock your agent out of the box. You want to go to an independent agent or somebody, or a good agent who can help you find these things, and that's what the checklist review will do.
Right.
And now here's the thing, Gary. Everybody who's actually done that, because I can't put a gun to somebody's head and say, hey, you better go do this. But the people who have followed through on it, Gary, actually found better policies for the same, if not lower prices.
So
Now, I don't know if that's still the case, but most people, my track record has been pretty good.
What kinds of things, though, does this review typically uncover?
Well, you'd be surprised in how often we find, the same issues. But first, deductibles that are much higher than the client remembers agreeing to. So often because, you've been quietly raised, or because the client chose a higher deductible years ago to save on premiums and has since forgotten. A second one is replacement cost versus actual cash value. This is probably the biggest one. So replacement costs, these are fundamentally different policies. Actual cash value means the insurance pays you for what your 15-year-old roof is worth today, maybe $5,000. So that's the depreciated value of the asset, your siding, your roof, whatever the case may be, versus replacement cost that actually pays the cost to replace it minus your deductible, maybe $35,000. A lot of people don't know which one they have. So if you get a phone call and say, hey, we can get your insurance cheaper, that might be true, but you may have actual cash value versus replacement costs, and you can get caught off guard down the road. So a third reason is coverage exclusions that have been added in or have always existed but were never explained. Again, the Property Casualty Check List will find those things. And fourth, the gap between what you owe in a liability lawsuit and what your umbrella actually pays and covers. So umbrella is another big thing that we use, that we talk about. That's actually separate, but it's all rolled into a similar conversation.
All right.
And the fifth thing, though, inflation, Gary, home values and construction costs have risen dramatically since a lot of people have taken out their policies. So a lot of people are insured for the purchase price in 2015, but not what it would cost to rebuild today.
And again, all this is available online at www.fullchecklist.org.
Or just go to my website, frplan.com, and make an appointment. Bring your policy, and we'll figure out a way to help you scrub through these things.
Folks, you're listening to On the Mark along with Mark Pappa. I'm Gary Byron. Mark is the president and CEO of Financial Resources Group out of Glastonbury. Find him online, as he just said, frplan.com, and at 860-657-8380. I will repeat that more towards the end of the show. Talk to you about what he's offering. It's got a $2,500 value. I'll let him get into that. All right, Mark, let's get practical here for a moment, because our listening audience is predominantly Connecticut. So for a homeowner in Connecticut listening right now, what are the three most important things they should be doing this upcoming week?
Okay, so when I request the documents for your full checklist review, one of the things we're going to ask you to do is pull out your declarations page. And the declarations page is the one-page summary on the front of your homeowner's policy. And look at your deductible. Not just your base deductible, but whether there are separate wind, hail, or hurricane deductibles listed. Okay? Mm-hmm. So it's not just your deductible. There's different ones. In Connecticut, we do see wind deductibles, particularly in the coastal areas. If you have a percentage-based wind deductible, then we would want to know what that number actually is or translates to into dollars. And then we would help you fill out the full checklist, the property casualty checklist directly with your agent.
All right. So that's a straightforward first step that anyone can do.
Yep, exactly. Okay. So that's something that I think everybody needs to do immediately, given the situation that we're seeing. Mm-hmm. Number two, verify your coverage is replacement cost or actual cash value. Again, the property casualty checklist will do that for you as part of our full checklist review. If you have a 20-year-old roof, that's a huge difference. And some people are getting cancellation notices if their policies are more than 20 years old, for starters, and they basically say, hey, you need a new roof before we write you some insurance. So if you've done renovations, a kitchen remodel, in addition, that's happened a lot since COVID, make sure your coverage amount reflects the current rebuild costs, not just what the house was worth when you originally bought the policy.
And number three?
Okay, so number three is separate from your P&C, and this is more tied to your auto, but this is super important. Check your umbrella policy, and if you don't have an umbrella policy, please come in and see me through the full checklist, and I'll get you to tell me why you need it. Because an umbrella policy provides excess liability coverage beyond your home and auto policies. If somebody slips and falls on your property and sues you for $1.5 million, and your homeowner's liability cap's $300,000, you have a $1.2 million problem. Okay, that you need to fight. Now, umbrella policies are typically very affordable. $1 million of coverage might cost $300 to $400 a year, but most people either don't have them or they haven't been updated in years. And if you want a structured way to review it, again, you have to go to my website, frplan.com, and you can also just request the P&C review kit. And I think it's super important that you do that. And again, what kind of advisor would I be if I wasn't protecting my clients against these kind of frivolous lawsuits?
This is why you're at the top of your game.
Would I be good or bad?
Oh, of course, right? I get you. I mean, this is why you're at the top of your game. I want to talk about people, though, who have already been denied. What recourse do they have?
Okay, and the first thing, dear, let me also bring up, I'm not a licensed P&C agent, by the way. I'm a financial advisor. I'm life and health licensed. So I only know enough to help warn people about what to look for here. So I just want to be very clear that I don't sell this type of insurance either. So the whole audience, you're listening to this, is probably like, Mark wants to sell me a new policy. Well, guess what? I don't sell this kind of insurance. Again, but why am I talking about it? I don't benefit from it, but guess who benefits?
Well, your client.
My clients, right.
Oh.
So I want to make that very clear to the audience. Okay. So anyway, so you were saying about people being denied. So more than there's many people. How do I put this? It takes persistence. First step is you have to ask your insurer for a written denial letter that explains exactly why the claim was denied and why the specific policy provisions they're relying on. Okay. So what are they saying what says in the policy, and what are they relying on to deny the claim? This is your right, and having it in writing is critical for any appeal.
I noticed that the Wall Street Journal actually provided a checklist of its own of steps that consumers can take. You want to walk through them?
Yes. Number one was request a written denial letter with reasons and all relevant documentation from the insurer. You want to gather additional supporting evidence, photos, independent contractor assessments, and expert reports. File a formal appeal to the insurer, and the process should be outlined in the denial letter or policy document. If the appeal is denied, file a complaint with your state insurance regulator in Connecticut. That's the Connecticut Insurance Department. And also consider a public adjuster or attorney who specializes in insurance claims. The National Association of Public Insurance Adjusters can help you actually find one locally. Or, Gary, you can go through all that trouble, that time, cost, hassle, and headache, or you can just give me a call, do the full checklist, get the Property Casualty Check List done at no cost or obligation. That's what you should be doing.
Yeah, there you go. Okay. Mark, there's an important nuance that the Journal also raises here. I'm looking at this as you were going over that list. That in most states, a denied claim can actually still trigger a rate increase or a policy renewal. That doesn't even make sense. Even if you receive nothing, I don't get it. Why is that?
Well, that's an important nuance that the Journal raises too. And in most states, a denied claim can still trigger a rate increase or policy or non-renewal, even if you've received nothing.
Yeah.
So it's crazy. It's maddening. In a handful of states like Texas, they have laws that bar insurers from penalizing customers for zero payment claims. Now, Connecticut homeowners should check whether their state has similar protections. Unfortunately, we are the insurance state, at least we used to be. And while Connecticut law prohibits insurers, I'm reading this directly from, it prohibits insurers from charging an explicit surcharge for $0 payouts or no-fault events under certain state statutes, the mere act of reporting an incident can still indirectly drive up your premiums in the state of Connecticut. Does that shock you, Gary?
No, but it's sad. It shouldn't be like that.
Yeah, exactly. I mean, all I did was say, now you're going to say I'm higher risk because I had just the intention of wanting to file an insurance claim and something. Oh. And in Connecticut, that's the case. And why do you think people are moving to Texas?
I need your disclaimer. And then I need you to this $2,500 value. Wow. It's actually, for me, I looked at it. I've read other checklists. Yours is so detailed, so thorough. I actually believe it's worth more than the $2,500 value that you've placed on it. But give me your disclaimer first.
Sure. The information presented in this program is for educational purposes and only should not be considered personalized investment advice. Financial Resources Group, LLC is a state-registered investment advisor in the state of Connecticut. For more information about our firm, services and fees, visit frplan.com. and request a copy of our Form ADV, which contains important disclosures about business practices, qualifications, and potential conflicts of interest. Investing involves risk, including the possible loss of principal. Always consult a qualified financial professional before making any decisions. And let me point out that in every single possible case, I do what I can to eliminate any possible conflict of interest. God forbid there is one, we disclose it, but we make sure. I like running my business in a way that is fully transparent and puts the client
That's
first.
the only way to be, and everybody expects that from you. It doesn't surprise me. To take about 30 or 40 seconds and explain your $2,500 value. People should be calling right now. First 5 callers. Explain that.
Well, Gary, we just spent an entire show on how insurance companies are finding little-known ways to not raise your premiums, keep you as a customer, but then deny claims, whether it's raising raising your deductibles or whittling down costs or flat out just denying claims. So that's one of the 21 things we discuss. We'll also scrub through your power of attorney to make sure you have the right language available. So God forbid you need that to work with your bank, brokerage firm, your insurance companies, Social Security for that matter. We go through all that. So we're doing a lot of things that we don't get paid to do, a lot of non-financial things. But why do you think, again, we do them? Because it's the right thing to do. If your advisor is you're paying your advisor fee just to manage your money and trade stocks and bonds and sit down with you on an asset allocation, even put together just a financial plan for you, that's not a bad advisor. But I have to tell you, we're doing so many things more than what most advisors are doing. And I'm also going to do a show on financial planning and how we handle that in the next episode, one of the next episodes, a future episode, because financial plans use projections, and projections are bogus. So I want to take a stab at that later. But yeah, no, it's great just to come in. We're going to unturn every single stone. We're going to look for every little liability so nothing jumps off the weeds and bite you. You can enjoy that Disney cruise or that trip to Greece with your family without unabated and not have to worry about this stuff.
I can't wait for that episode, and that one's coming up. Folks, you've been listening to On the Mark. Let me give you some contact information for Mark. Financial Resources Group is located in Glastonbury. You can find them online at www.frplan.com. FR, Financial Resources, right? Most importantly, right now, first 5 callers at 860-657-8380 will get that $2,500 valued assessment. I'll give that number again, 860-657-8380. For Mark Pappa, I'm Gary Byron. Thank you so much for listening to On the Mark. Until next Saturday morning, have a good one, everybody. So long.